Is that subcontractor's diesel running on your Scope 1 or somebody else's? Get it wrong, and your next ISO 14001 audit will catch it. That exact ambiguity is what ISO 14001/2015 Clause 9.2, your internal audit, is built to surface. Clause 9.1.1 already requires you to monitor that same data. Get it wrong, and your LEED or BREEAM materials credit verification stalls too. Here's what changes today. You'll resolve whose scope is it using GHG Protocol's 3 boundary tests. You'll know which of Scope 3's 15 categories applies when it isn't yours. And that generator from the opening? By the end of this video, you'll classify it correctly without hesitating. The GHG Protocol's corporate standard, published in 2001, revised in 2004, is the base nearly every disclosure regime requires. It splits emissions into 3 scopes by who controls the source, not who benefits from it. You'll choose one of 3 boundary approaches: equity share, financial control, or operational control. Construction firms default to operational control. CDP, GRI, SBTI, and now ISO, partnered with GHG Protocol since September 2025, all inherit this exact structure. You know operational control is the test by now. Here's what that means for your paperwork. Document the control basis. Don't infer it from who owns the equipment. 4 source categories need separate evidence: stationary combustion, mobile combustion, process emissions, fugitive emissions. Fugitive emissions records, refrigerant leak logs, are the most common missing evidence in Scope 1 audits. And a rented generator under your control still needs its own consumption log, independent of the rental agreement. Control is the test. Ownership never was. You already know Scope 2 covers purchased energy. Here's the compliance gap most teams miss. Dual reporting. Location-based and market-based is a documentation requirement, not optional detail. Reporting only location-based when contractual instruments exist in your market is a common audit finding. And your location-based factor has to match the grid region in your stated inventory boundary, not a generic national average. One number isn't enough. The standard requires 2. You know Scope 3 has 15 categories. What matters for your inventory boundary is this. Your boundary statement has to say which categories are included and why. Category 1's dominance for construction means it needs your most rigorous evidence, not your lightest. Excluding a category requires documented justification. Silence isn't acceptable under the relevance test. That's its own video, coming next. Walk your site, and Scope 3 is everywhere. That concrete truck? Category 1, embodied carbon, locked in before it arrived. That crane you bought outright? Category 2. And the cars in your parking lot? Category 7, employee commuting, the easiest one to undercount completely. Remember that opening claim? Here's where it comes from. The World Green Building Council puts embodied carbon at roughly 11% of global emissions today. But under business as usual, that's projected to reach nearly half of all new construction emissions by 2050. Most site reports never even measure it. 4 categories carry most of construction's Scope 3. Category 1, purchased goods, concrete, steel, embodied carbon. Category 2, capital goods, cranes and plant you buy outright. Category 4, upstream transport, every delivery to your gate. And categories 5 and 7, waste and employee commuting. 3 more categories apply on most sites too. That's the dedicated video.
Let's lock this in. Scope 1. Operational control is the test. Scope 2. Dual reporting, both methods. Scope 3. 15 categories. Materiality judged, not mandated.
Remember the generator from the start of this video? Here's the mistake that scenario was built to test. Counting a subcontractor's equipment as your own Scope 1 because it's on your site. Wrong. Control is the test, not location. That fuel usually sits in your Scope 3, Category 1. This exact error is what ISO 14001-2015 Clause 9.1.1 is built to catch. This isn't academic. LEED v4.1's materials credits and BREEAMs both require verifiable Category 1 data, not estimates. CDP, GRI, and ISO's joint standards all inherit GHG Protocol's exact boundaries. Get this wrong, and it's a documented nonconformity under Clause 9.2. One honest update. GHG Protocol published a Phase 1 progress update on Scope 3 revisions this past March. ISO has been partnering on this since September 2025. The 2011 standard stays binding until the new one publishes, targeted for late 2027. One proposal on the table, a 16th category. Nothing's final. Build the habit now. Want to start today? Pick your boundary approach: equity share, financial control, or operational control. Then list every source where you hold operational control, regardless of who owns it. That's your Scope 1 and 2 inventory. Done. Step 2 is harder. It involves other people. Identify your Category 1 spend: concrete, steel, the big materials. Then flag every subcontractor operating equipment on site and confirm whose Scope 1 that fuel actually sits in. That's your Scope 3 starting point. Picture your site right now. A generator under your operational control. Scope 1. A crane on grid power. Scope 2. Dual reported. A concrete pour. Category 1, Scope 3. Embodied before it arrived. Same afternoon. 3 scopes. You can name every one. That subcontractor's generator from the start? You can classify it correctly now. Same logic applies to every source on your site, across all 3 scopes. Next time, all 15 Scope 3 categories, one by one. Subscribe so you don't miss it.